The latest episode of Bloomberg's Tiger Money podcast features one of the best-known China analysts, Grow Investment Group partner and chief economist Hao Hong. Our colleague David Ingles asked him what the world is getting wrong about the world's second biggest economy.
So many misconceptions, though. We can go on another hour, talking about just to clear all the misconceptions. I think.
Well, what is one that you think
just the biggest one
is something that if people get over that, if people understand the nuance, and that misconception disappears, we get a decent allocation back.
Yes.
Into Chinese equity markets from dollar investors.
Yes, the Chinese mentality of working hard and saving hard. I think it's very difficult to understand, because it's a cultural thing. It's been passed down for generations. Ever since we were kids, we're taught to work very hard and save very hard for rainy days. And so I don't think the Chinese savings phenomenon and as a result the overinvestments phenomenon is going to go away because of the tariffs. So I think that's a huge misconception. This is a structural sort of a structural peculiarity that cannot be fixed by tariffs and by all these trade wars and stuff. So I think if people understand that, then people would sort of think differently. Because for some of the foreign investors that I talk to, they seems to be seeing the Chinese overinvestment in the manufacturing industry as an action with malicious purpose.